So today we are going to revise the audit report chapter, and if we talk about the audit report chapter, then in the audit report chapter we are going to see four standards that falls in the audit report category, that is as a 700, 701, 705 and 706. Then we have CARO 2020 and we have section 143. So all this together comprises of the audit report. The four standards 700, 701, 705, 706, then section 143 and along with that the CARO reporting. So first of all, let us discuss the four standards. Let us quickly revise the four standards. So first of all, if we talk about auditor's opinion, you see auditor's opinion can either be the unmodified opinion or it can be the modified opinion. Now, if the auditor has given an unmodified opinion, as a 700 comes into picture, and if auditor gives a modified opinion, 705 comes into picture. If at all the auditor does not want to modify his opinion, in that situation he have other resorts to highlight his issues, like including an emphasis of matter paragraph or other matter paragraph that we study in as a 706, or including a key audit matter para that we have studied as a 701. So talking about as a 700, that is forming an opinion and reporting on financial statements. So SA 700 deals with unmodified opinion and form and content of independent auditor's report. Now we have the general purpose framework which is defined in SA 700. What is a general purpose framework? It means that general purpose framework is a financial reporting framework that is designed to meet the common financial information needs of the users of financial statement, and it may be of two types. One is fair presentation framework and other is compliance framework. So in fair presentation framework, that's a flexible framework that involves compliance with the requirement of FRF, but it contains a certain acknowledgement. It contains a certain acknowledgement that management may provide disclosures from the requirement of a framework to achieve better presentation. So in exceptional circumstances, to achieve better presentation, management may provide disclosures beyond the requirement of framework. But if we talk about compliance framework, that's a very rigid framework. It does not contain any such kind of acknowledgement, and the FRF must be complied anyhow. Then we talk about forming an opinion on the financial statements. So as per SA 700, to conclude that whether the auditor has been able to obtain reasonable assurance or not, auditor shall consider whether he is able to obtain SAE, that is sufficient appropriate audit evidences. He is going to consider the impact of the uncorrected misstatements. He is going to evaluate whether financial statements are prepared in accordance with the FRF, and for that he is going to see whether the accounting policies are consistently followed, whether the accounting policies are consistent with the requirements of the framework, whether the estimates prepared by the management is reasonable, whether the disclosures given by the management is proper, whether the terminologies used, including the title of financial statement, is appropriate. And also the auditor is going to see that if the financial statements are prepared in accordance with a fair presentation framework, whether they do achieve fair presentation. Then the most important concept of the standard, contents of auditor's report. Now you just remember contents of auditor's report, that there is your TAU. The TAU wants a certain opinion from the doctor, and when the TAU asks for a certain opinion from the doctor says that your going concern is in danger, and hearing that the going concern is in danger, the TAU goes into the coma. The TAU goes into the coma. Now when he goes in the coma, he just recalls all his responsibilities of life. He just recalls his other responsibilities. He recalls the place where he went into honeymoon trip with his wife. He recalls the particular date on which he got married. So just remembering this formula, you can remember all the contents of audit report. For T we have title, for A we have addressee, for O we have auditor's opinion, then we have basis of opinion, then we have going concern paragraph. If we talk about coma, then we have key audit matters for K. For A we have other information, then M say we have management responsibility, A say we have auditor's responsibilities, then it thinks about his responsibilities, that is auditor responsibilities, and then comes the date, place, signature. So auditor's opinion paragraph. If we talk about auditor's opinion paragraph, this paragraph should not only consist of introduction, but this paragraph should also consist of the introduction of the entity what he is auditing. Like he will identify the entity whose financial statements are being audited. He will state that the financial statements are audited. He will identify the title of financial statements. He will also refer to the time period covered by the audited financial statements. If we have the basis for opinion, do remember in the basis of opinion, if we are giving an unmodified opinion, then we will be writing it down that our audit was conducted in accordance with the standards, in accordance with the ethical requirements, and we have obtained sufficient appropriate audit evidence. But if at all the auditor has issued qualified opinion, then this basis for opinion para will become basis for qualified opinion para. If at all we have issued adverse opinion, then this basis for opinion para will become basis for adverse opinion para. And similarly, if we have issued a disclaimer, this basis for opinion para will become a disclaimer of opinion para. Right, and if we have included a disclaimer of opinion para, then do remember that key audit matter para will not come, because we study in SS 705, we study in SS 701 that if we disclaim the report, we don't include the key audit matters para. Then we have the going concern reporting. So the reporting is to be done in accordance with SF 570, the going concern reporting. So if the use of going concern basis of accounting is appropriate by the management, we will simply give an adverse opinion. But if the use of going concern basis of accounting is appropriate but a material uncertainty exists, so we will see whether management has given appropriate disclosures or not. If the management has not given appropriate disclosures, we will give a modified opinion, and if the management has given appropriate disclosures, we cannot issue a modified opinion, so we will be reporting about the same in the going concern para as per the requirement of SF 570. Then we have the key audit matters para. Then we have the other information para. This concept is basically dealt with in SS 720. Then we have the management responsibility para, where all the management responsibilities will be listed. Then we have the auditor's responsibilities para, where all the auditor's responsibilities will be listed. Then we have the location of description of auditor's responsibilities para, that comes within the auditor's responsibilities para also, where we'll be writing that where the auditor's responsibilities have been referred, whether they are referred within the body of audit report itself, or whether they are referred in a separate annexure, in a separate appendix, or whether they are referred in the specific website of the authority under which we are doing the audit. Then we have other reporting responsibilities. In the other reporting responsibilities paragraph, mainly we are going to include the section 143 reporting and Caro 20 reporting. Then we have signature of the audit. If we talk about signature, then again the personal name of the engagement partner, the name of the firm, the membership number, firm registration number, UDIN number, everything will come. Then we have the date of auditor's report. We have to remember that the auditor's report shall not be dated on earlier than the date on which the auditor has obtained sufficient appropriate audit evidences. And finally, the place of signature, it is ordinarily the city where the audit report is being signed. So this is the main concept. Apart from this, we also have a concept of supplementary information presented with the financial statements in SS 700. Now you see, if supplementary information is presented in addition to the financial information, the user of financial statement might get confused that the auditor's opinion also covers the supplementary information. So what we have to see is that the supplementary information that is not a part of the FRF, because supplementary information is not a part of the FRF, right? The supplementary information that is not a part of the applicable FRF, whether it is an integral part of the audited financial statement. If it is an integral part of the audited financial statement, then our audit opinion will be covering the supplementary information also. But if it is not an integral part of the financial information, in that situation our opinion will not be covering the supplementary information, and hence we shall be asking the management to change the manner of presenting the unaudited supplementary financial information so that the user of financial statement might not get confused. Right. Then there is also a topic, audit reports for audit conducted in accordance with both standards and international standards. So if it happens that we are required to conduct the audit in accordance with standards issued by ICAI plus any other international standard, then we may refer to both the standards and international standards of auditing, but the only condition is that there should be no conflict in the requirement of the standards of auditing and the international standards of auditing. Under both standards we are going to form the same opinion. We are not going to form different opinions. And it is not going to happen that the other standard is going to ask us not to include the EOM paragraph or the OM paragraph. And both standards must have a certain set of minimum elements of audit report. Then we have SS 705. So if we talk about SS 705, that is modifications to the opinion in the independent auditor's report. So see, there are three types of modified opinions. Once we have the qualified opinion, another we have the adverse opinion, and the third is we have the disclaimer. So basically there are two factors to decide. There are two factors to decide the modification. One is materiality of misstatement, another is the pervasiveness. Also, the auditor needs to check whether he is able to obtain sufficient appropriate audit evidences or is unable to obtain sufficient appropriate audit evidences. Whether he is able to obtain sufficient appropriate audit evidences or he is not able to obtain sufficient appropriate audit evidences, if the misstatements that he has identified are material but those are not pervasive, those are not having a pervasive effect on the financial statements, the auditor is going to give a qualified opinion on both the cases. But if the auditor has obtained sufficient appropriate audit evidence and at the same time he has concluded that the misstatements individually or in aggregate are material and pervasive at the same time to the financial statement, in that scenario he is going to give an adverse opinion. And the auditor is going to give a disclaimer only when the auditor is unable to obtain sufficient appropriate audit evidence on which to base his audit opinion, and at the same time auditor concludes that the possible effects of the financial statements of undetected misstatements could be material and pervasive. So यहाँ पे is going to see the possible effects, right? And do remember that when we draft a disclaimer of opinion paragraph, we clearly mention that accordingly we do not express an opinion because we have not been able to obtain sufficient appropriate audit evidences. So that we clearly write it down. Then if we talk about SS 701, that talks about key audit matters, communicating key audit matters in the independent auditor's report. So do remember that if the auditor has given a disclaimer, the key audit matters report will not come, the key audit matters para will not come. See, Asset 260 has a certain set of requirement that the auditor needs to communicate certain significant issues to those charged with governance. Now, out of the matters you have communicated to those charged with governance, the most significant issues, you shall be highlighting them and you shall be pointing out them in the key audit matters paragraph. The basic objective is to increase transparency, and the basic objective is to provide additional information to the users of financial statement and to assist them in decision making. That is the basic objective, to bring in more transparency and to give the users a better insight of the audit process, So basically in the key audit matter para, what is going to happen is that any significant matter that I have identified, then I am going to report in the key audit matter para that okay, this is the significant matter that I identified, this is the audit procedure that I performed, this is the response of the management that I got. So those will come in the key audit matter para because we want the users to know about it, right? But do remember that suppose already we have modified certain matters, we have given a modified opinion in respect of certain matters, so those matters are already highlighted and included in the basis for modification paragraph, so that will not again come in the key audit matter paragraph. Similarly, if there was a material uncertainty regarding going concern, so although that qualifies as a key audit matter, but the reporting of the same we have already done in SA 570, and because of the fact that we have already done the reporting of going concern separately, we will not include again it in the key audit matters paragraph. So that is something we need to be very, very careful about. Some popular examples of key audit matters can be like, while determining provision for losses, valuation of financial instruments, matters related to revenue recognition. All this can be important areas, taxation matters, about which I can disclose in the key audit matters paragraph. Now, key audit matters, how to determine key audit matters? So do remember, key audit matters are to be determined from the matters communicated to those charged with governance. And what are the factors we shall consider based on which we shall determine the key audit matters? It depends on the areas of higher assessed ROMM. Risk kahan zyada hai, where the ROMM is high, which are the significant risk in accordance with SA 315. Then it will depend upon the significant auditor judgments related to financial statements, and it will also depend upon significant effect or transactions occurred during the year. So risk zyada hai, those matters, from those matters we will determine the KAM. Then significant audit judgments involved by the management, made by the management, from there we will determine the KAM. The significant events or transactions occurred during the year, from there we will determine KAM. And if there are no KAM to communicate, a report must clearly indicate that there are no KAM to communicate. Also do remember that concept of KAM is applicable only in case of listed entities, and for other entities it is optional for the auditor whether he wants to include KAM or not. There is one important concept, circumstances in which a matter to be determined as a KAM is not included in the auditor's report. So basically, if the law or regulation precludes public disclosure about the matter, law says this matter is not to be publicly disclosed. So in that particular scenario, even if you determine that matter as a KAM, you will not disclose the same in the KAM para. Another thing, just remember that the objective of KAM is public benefit. Now if disclosing the same is going to outweigh the public benefit, the adverse effects of the same is going to outweigh the public benefits, the auditor may decide not to report it at all. The auditor may decide not to report about the same in the key audit matters paragraph. Then we have SS 706, that is the emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. So see, priority number one, our priority number one as an auditor is that if we are doing the audit of listed entities, so in that very scenario, what we are going to do is, if we are going to do the audit of listed entities, so in that very scenario, our priority is filtering out the key audit matters and including the significant matters in the key audit matters. Now supposingly we have not included some matter in the key audit matter, we have not included some matter in the key audit matter, but we still feel that the matter is very much relevant and the matter contains to financial statements, matter is regarding the financial statements, and we feel that it is very much relevant, the user must know about it. Another alternative we have is the emphasis of matter paragraph. So what is the emphasis of matter paragraph? So see, there are four characteristics of emphasis of matter paragraph. Firstly, a matter has already been presented or disclosed in the financial statements. A matter has already been presented or disclosed in the financial statements by the management. Secondly, the auditor feels that the matter is fundamental to the user's understanding of financial statement. Thirdly, the auditor is satisfied that we are not required to modify the opinion with respect to same, because if the auditor is required to modify the opinion with respect to same, that matter will go to the basis for modification paragraph and not come in the EOM. And fourthly, the matter has not been determined as a key audit matter because we don't want any duplicacy out there. We also have a concept known as other matters paragraph. Now in the other matters paragraph, what happens is that apart from those matters presented or disclosed in the financial statement, if we talk about other matters, for example, the component of the financial statements are not being audited or audited by someone else. So if we talk about other matters not being a part of financial statement, but still in our judgment we feel that this matter is fundamental to the user's understanding, auditor shall include the matter in the OM paragraph, provided that again the matter has not been determined as a key audit matter because we don't want any duplicacy, and provided that the matter is not prohibited by law. So basically, if we talk about, there are four characteristics of OM paragraph. The first characteristic, that is, it is a matter other than those presented or disclosed in the financial statement. Second characteristic, it is enough to draw users' attention to the matter and fundamental to the understanding of the users. The third characteristic, the matter is not prohibited by law, and the fourth characteristic, the matter has not been determined as a key audit matter. Do remember, if we talk about KAM, key audit matters, those can be financial matters or non-financial matters. If we talk about emphasis of matter, those will talk only about financial matters, and if we talk about OM para, those will talk only about non-financial matters. So these are the fundamental differences that you need to remember. Then, as I told you, in audit report we have section 143, powers and duties of an auditor. So if we talk about powers and duties of an auditor, section 143 has 15 subsections altogether, 15 subsections. We developed a formula in the class to learn all the 15 subsections. So what's the formula I gave? That, the very first day the auditor asked his mother, the very first day he was born, the auditor was born, he asked his mother that what is the, he started inquiring his mother. The very second day he asked his mother what is the objective of his life. Then his mother told him that the objective of your life is to make a audit report. He told, Maza aayega, now I will modify the report. So subsection 1 that talks about specific inquiries. Subsection 2 talks about objective. Subsection 3 matters to be included in modification. Subsection 4 reason for modification. Now his mother explained him a schedule of his life, that every month 5th, 6th, 7th you will go and do government audit, 8th you will do branch audit, right? And there you will comply with the standards, and those standards are prescribed by the CG. Now, what to do after complying with the standards? Then do the CARO reporting and report about fraud. So we have 5, 6, 7, subsection 5, 6, 7 government audit, subsection 8 branch audit, subsection 9 complying with the standards, subsection 10 power of CG to prescribe the standards, subsection 11 CARO reporting, subsection 12 reporting of fraud to the CG, subsection 12 to 15 reporting to fraud to the CG. So 143 subsection 1, it talks about the rights of the auditor to access to the books of accounts of the company or holding or associate and to get information from the officers or officers of the company. Also it talks about 6 specific inquiries. inquiries. The formula to learn the specific inquiries where LIC के auditor का BP high हो गया. So L for loans and advances, we have 2 points regarding loans and advances. Loans and advances made by the company, they are secured or not, and whether they are not shown as deposits. Then I for investment, if the company has made certain investment in securities, whether the selling price are not less than the cost price. Then we have C for cash. If the shares are issued for cash, then we shall report that, if the shares are allotted for cash, whether the cash is actually received, and if the cash is not received, whether the position in the balance sheet is not misleading. And then we have book entries, whether the book entries are not prejudicial, and we have P, personal expenditure not to be debited in the revenue account. Subsection 2 talks about objective of the auditor, that is the objective of the auditor is to report whether the financial statements reflect true and fair view. Subsection 3, a very, very important subsection, what are the matters to be included in the auditor's report? In together, we have 16 matters to be included in the auditor's report. We will be revising this at last. 143 subsection 4, the auditor shall give reason for modification if any. Subsection 5, 6, 7 talks about government audit. Subsection 5 talks about parts of CAG. So basically, CAG has the power to appoint the auditors under 139 subsection 5 or subsection 7. CAG shall be directing the auditors, and the auditor shall be submitting copy of their audit report to the CAG. 143 subsection 6 says, or CAG has the right to conduct supplementary audit within 60 days from the date of receipt of audit report, and that supplementary audit will again be conducted on the direction of the CAG. The supplementary auditor shall be furnishing his report to the CAG, and CAG may comment upon such supplementary report, and those supplementary report along with the comments of the CAG will be circulated to the members of the financial statement. And 143 subsection 7, the CAG has the power to get the test audit conducted. 143 subsection 8, it talks about provisions pertaining to branch audit. So do remember, the branch audit may be, the branch accounts may be audited by the same person, or he may be appointed by a different person, right? We are talking about the principal auditor out here, that the branch accounts may be audited by the principal auditor appointed for the purpose of section 139, or he may be a different person, but the basic condition is that he should be qualified. He should be qualified enough. The rights and duties of the branch auditor shall be the same as statutory auditor, and the branch auditor is supposed to prepare a report of the accounts of his branch and submit it to the principal auditor, because the principal auditor is going to consider the copy of branch audit reports. We have 143 subsection 9, that is every auditor shall comply with the standards of auditing. We have 143 subsection 10, that the central government may prescribe the standards of auditing as recommended by ICAI in consultation with NAFRA. We have section 143 subsection 12 to subsection 15, that is reporting of fraud by the CG. So basically what the concept says, that if an auditor of the company during the course of his duties as an auditor, he has any reason to believe whatsoever that a fraud is being committed, and that particular individual fraud has an amount of 1 CR or more, he shall report about the fraud to the central government within 60 days. And there is a certain procedure to report the fraud given in Rule 13. That very fraud the auditor comes to know, or the anticipated fraud he has any reason to believe, so anticipated fraud, he shall report about the same fraud in 84 to the board of directors or audit committee within 2 days. Then the audit committee shall respond within 45 days with their reply. Along with the reply of the audit committee, we shall communicate further to the CG. And if the audit committee does not reply, if the BOD does not reply, we shall forward a report that they have not replied. And we shall be sending a report to the Secretary MCA in a sealed cover by registered post with acknowledgement due or speed post. Right, and the report shall be sent on a letterhead including our email address, phone number, membership number, everything. And this provision shall also apply mutatis mutandis, the words used in law, mutatis mutandis, to the cost accountants and company secretaries as well. And if the statutory auditor or the cost accountant or the company secretary, if they don't comply with the requirements of section 143, subsection 12, then penalty is imposed upon section 143 subsection 15, and the penalty is, if you are the auditor of a listed company, a flat amount of 5 lakh rupees shall be levied, and if you are the auditor of other companies, a flat amount of 1 lakh rupees is going to be levied. Then we have 143 subsection 3, matters to be included in the auditor's report. So you see, in the section we developed a formula. The matters to be included in the auditor's report, you will remember A, B, C, D. So 3 points from A, 3 points from B, 2 points from C, and 1 point from D. So what was A, B, C, D? So A for all information obtained or not, A for accounting standards complied or not, and A for adverse remark if any on the books of accounts. Then we have B for books of accounts properly maintained or not. We have B for balance sheet and P&L, whether the balance sheet P&L tallies with the books or not. And we have branch accountant, whether the branch office, whether the auditor of the branch has sent his branch audit reports under 143 subsection 8, and if he has sent the same, the manner in which he has dealt with. C stands for control, that is the auditor should report about internal financial controls. And C also stands for comments, his comments, right? C also stands for his comments, his special comments if any on the financial statements on the maintenance of accounts. And then we have D for director disqualification under section 164 subsection 2. Director disqualification under section 164 subsection 2. Do remember the reporting on IFC is not applicable to following companies. It is not applicable to one person companies, it is not applicable to small companies, and it is not applicable to private companies having a turnover of less than 50 CR and aggregate of borrowings from banks, financial institutions, body corporate less than 25 CR. Apart from this, we have other matters to be reported in the rules as well. For that, we remembered that. Do remember, if Deepika Padukone is the auditor of the company, what she will be doing? So she will be taking, if Deepika Padukone is the auditor of the company, she will be driving all the people mad in the organization, right? And even they will forget their salaries. So Deepika Padukone mad, DP mad, D for delay in transfer to IEPF, P for pending litigation, P for provision of losses, M for management representation, A for accounting software, and D for dividend, declaration of dividend. And also we have an additional point of reporting called as managerial remuneration. So auditor should report whether there is a delay in transfer of amount to IEPF. The auditor should report about pending litigations if any. The auditor should report if the company has made provision for foreseeable losses for derivative contracts. Then the auditor shall report about if the dividend is paid, whether it is paid in accordance with the requirement of section 123. The auditor should report that if the company is using accounting software, then those accounting software, whether they have the feature of recording audit trail or not. And the auditor shall also take management representation with respect to certain matters. The auditor shall also take management representation to certain matters that management has not done any kind of indirect rerouting of cash flow. My auditor shall take management representation that they have not done any kind of indirect rerouting of cash flow. If they have passed on the money, if they have entered into such kind of transaction that they have given loan, they have given funds to one party and one party has passed on the money to other party, means if they have passed that particular loan or funds by the way of intermediary and ultimate beneficiary is someone else. And if similarly a transaction has entered that management has received funds from someone else via a intermediary, so in those situations, management has disclosed about the same in the notes to accounts. The auditor shall be taking a written management representation that if you have entered any such kind of transactions of giving the money or receiving the money, you have disclosed them in the notes to accounts. And auditor shall also perform his audit procedures and verify whether the representation given by the management is appropriate or not. And if we talk about the chapter of CARO, about the chapter of CARO, for CARO 2020 I have provided you a separate dedicated clip. For CARO 2020 I have provided you a separate dedicated clip. So a separate revision video is available for CARO 2020. It's just a half-hour revision video. It's available in Hindi, it's available in English. You can refer any of them, and also you will be getting a voice note of the same separately as well. So technically that falls a part of audit report chapter, but I have provided the content separately for that. I have provided the revision separately for that. So keep hearing these audios again and again. Just make it a habit that on a daily basis you are hearing these audios again and again, so that you don't tend to forget these keywords. And if you feel that these audios are beneficial for you, then do spread them with your friends and make sure that the entire India is listening to these audio clips.